Hello my fellow investors and welcome back to the fourth day of this insane earnings week. Today guys, it is Thursday and we got a lot of companies here that reported earnings. The one that I really want to take a look at and the one that, it just completely moved the entire market today guys. Intel Corporation. They released earnings today post-market and oh my god was it bad. Oh dear lord, that was atrocious. So I want to take a look at these earnings guys because, well, Intel is a company that I have done a deep dive in. I did a video a couple weeks back of reading pretty much their whole entire 10Q. And I decided to essentially put in like $1,000 into this company and then dollar cost average down. And that's about it, fearing that it would pull a Chevron scenario when oil went negative. So as of today, yeah, I'm probably going to continue to dollar cost average in because it is a lot lower than what it was a couple days ago or even just this morning, honestly. So we're going to take a look at Intel guys. And I would also like to announce right here, right now that I would like to change up the way I do these videos, or at least for this earnings season, because it's a lot of companies. I want to cover a lot of them. I'm planning to put out Intel guys tonight on the 26th around like 8:30 p.m. So when you guys are seeing this, obviously you'll see this, right? But I do want to cover a lot more. I want to cover Visa. I want to cover American Airlines. I want to cover Valero. I want to cover the ones from yesterday, Next Era Energy. I want to cover AT&T. So because I want to do all of these ones, what I'm planning to do is tomorrow on the 27th, I will put out 3 sporadic videos throughout the day. One at 8 o'clock, another one at 12 p.m., and then one at 4 p.m. Just so that way you guys have a lot more content throughout the day, at least for this earnings season. Again, that's not going to be like a normal thing. Once earnings season comes down, we'll go back to the one video a day at 4 p.m. But for now, that's what I'm thinking about doing. Tell me what you guys think in the comment section below. So with that said, let's get started with this analysis. Alright guys, so we are here at Intel's website. Looking really awesome, looking very, very cool. I love the blue and all this crazy stuff. But guys, this is just absolutely atrocious what happened to them during earnings. Oh dear lord. Now we're going to take a look at the earnings report. And of course, like always, this will be linked in the description below if you guys would like to read it fully. And of course, this is not financial advice, guys. Please do your own due diligence. This is why I give this calculators out for free, as well as I leave the earnings reports in the description below. Please do your own due diligence because you can lose money, even the blue chips. We just saw it with this one. So with that said, coming over here to Seeking Alpha's earnings summary, we can see that this is not updated yet. This is still on the estimates. However, the EPS normalized estimate was 20 cents. EPS gap estimate -9 cents. Revenue estimate of $14.5 billion. And you can see there was a lot of negative revisions overall. And the final verdict for their earnings was Intel non-GAAP EPS of 10 cents. Misses by 10 cents. Remember, they were expecting 20 cents. Yeah, they got half. Revenue of $14 billion, misses by $490 million. Dear Lord, oh my God. So you can see that they did not do good, guys. They fell a significant amount. I'll show you guys how much they fell in just a little bit. But for now, let's come over into their earnings release for the fourth quarter in the full year of 2022. Fourth quarter revenue, $14 billion, down 32%. 32% year over year and down 28% year over year on a non-GAAP basis. Full year revenue was $63.1 billion. Even the full year was down 20% and down 60% year over year on a non-GAAP basis. Fourth quarter earnings loss per share EPS of -16 cents. Oh my God. So on a GAAP basis, you can see that they were expecting what? -9 cents. They did -16. Wow. Non-GAAP EPS was 10 cents as we saw. Full year EPS was $1.94 and non-GAAP EPS was $1.84. Forecasting oh dear lord, here comes the forecast. Forecasting first quarter 2023 revenue of $10.5 billion to $11.5 billion. Expecting first quarter EPS of -80 cents. -80. Wait a minute. Fourth quarter EPS of GAAP was -16 and of non-GAAP was 10 cents. Expected EPS first quarter of 80 cents. That is actually GAAP. So right here we have a non-GAAP of 15 cents. So they're expecting the GAAP one to go even further into the negative, and the non-GAAP one's going to go even further down to negative 15 cents. That is an atrocious forecast. Oh my lord. Declares quarterly cash dividend of 36 cents. Okay. Oh my god. Okay, we definitely have to take a look at this because I don't know if this is an increase or not. I don't remember what their last dividend was, but their free cash flow just went negative on the year. Yeah, prepare for this dividend to get cut. Now let's actually take a look at what the CEO had to say. Quote, despite the economic and market headwinds, boy, are you saying something there. We continue to make good... No, you haven't! We continue to make good progress in our strategic transformation in Q4, including advancing our product roadmap and improving our operational structure and processes to drive efficiencies while delivering at the low end of our guided range, said Pat Gelsinger, Intel CEO. In 2023, we will continue to navigate the short-term challenges while striving to meet our long-term commitments, including delivering leadership products anchored on open and secure platforms powered by at-scale manufacturing and supercharged by our incredible team. Quote, in the fourth quarter, we took steps to right-size the organization and rationalize our investments, prioritizing the areas where we can deliver the highest value for the long term, said David Zinsner, Intel CFO. These actions underpin our cost reduction targets for $3 billion in 2023 and set the stage to achieve $8 billion to $10 billion by the end of 2025. Let's take a look at these numbers and compare them to last year. We got revenue on a GAAP basis, guys, 2021 Q4, $20.5 billion. Q4 2022, $14 billion, down 32%, as we just saw. When it comes to the non-GAAP, $15.5 billion to $14 billion. I don't know why this has a caret over here. That is down 28%. Gross margin, GAAP basis, Q4 of 2021, 53.6% to 39.2%, down 14.5%. On the non-GAAP, we went from 55.8% to 53.8%, down 12.1 percentage points. R&D and MG&A, basically their R&D, like what are they innovating, they went from $6 billion to 6.2, so that at least they're increasing on their R&D. That is up 3% on the GAAP basis, and 5.4 to 5.5, up 3% on the non-GAAP basis. Operating margin lost. They went from 24.3% to a negative 8.1%. That is down 32 percentage points. I think I said basis points for this one. I'm so terribly sorry. I meant percentage points. On a non-GAAP basis, they went from 28.2% to down to 4.3%, down 23.9 percentage points. I don't really care about the tax rate. Let's take a look at the net income loss. $4.6 billion in the positive in 2021, guys. In 2022, on a GAAP basis, negative $0.7 billion. Negative $0.7 billion. Oh my god, that is down 114% on non-GAAP basis, 4.7 billion to 0.4 billion. You know what? At least they're positive on non-GAAP basis. That is down 92% though. That's still a lot. Earnings per share lost. That went from $1.13 to, well, negative 16 cents. Dear Lord. Down again another 114%. On a non-GAAP basis, $1.15 to 10 cents, down 92%. So now let's come over here into the calculator to see what in the world we can tell about from Intel on a much bigger scale. We got the ticker symbol for INTC, market cap of $124.2 billion and a PE of 9.28. This PE has gone down so much. Now the current share price is $30.09. The problem with this is that this doesn't take into account the post-market share price, and their earnings came out post-market. This, guys, fell a whopping 9.5% post-market after their earnings released to a share price of $27.22. You can see that on the trading day, they were up a pretty good amount, 1.31% for the rest of the market. And then after market, they were just like, boom, plunge, 10% down. Dear Lord. On the 1 year, they're down almost 42%. On the year to date, you know what? They're up. Ironically enough, they're up. But I think after today, yeah, I think they're going to be a little bit closer to not being in the positive. Year to date, guys, 12.6% up. 52-week ranges is $24.59 to $52.51. They do pay out a dividend of $1.46, which is a yield right now, guys, of 4.92%. Now, I don't think that this is altered to what the current share price is at $27. I think this is taken at market close or 4 o'clock. So with that said, this is probably a lot higher. I would say this is like around like 5% or more. Payout ratio of 50.79%, a 5-year CAGR of 6.26 with 8 consecutive years of dividend payment. Ex-dividend date passed as of November 4th, payout date was on December 1st, and they pay their dividends quarterly. And as we can see, that increase of 36 cents that they mentioned in their earnings report, it is updated here. So, okay, they have issued a higher dividend, or at least they have issued a dividend of 37 cents. And with the current shares outstanding, this means that they pay out $6 billion in dividends every single year. Now, here's the problem when it comes to this. So their payout ratio, in accordance to Seeking Alpha, is around 50%. However, in regards to the 5-year average free cash flow, they are at $3.7 billion in the positive. Really, really good. Except for the fact that last year's free cash flow, take a look at that. Negative $19 billion. Negative $19 billion. Last year's free cash flow went negative. 2022 free cash flow went negative. Oh dear Lord. And I'm going to show you guys by how much. But these payout ratios are 45%, negative 45% for the last year's free cash flow and 62% for the 5-year average. Remember when I said during their earnings, guys, this dividend might get cut, and that's the reason why. The fact that last year's free cash flow cannot pay out this dividend at all, and they're nearly at 50%, negative 50%. Oh my God, this is going to be an atrocious thing because, yeah, they're going to have to eventually cut that dividend if they do not bring up that free cash flow. So now let's actually take a look at these fundamentals, starting of course with the net income. 5 years ago of $21 billion, 1 year ago of $13.3 billion. That is a massive decrease of 37%. And we can see also on top of that, every single year, guys, they have been consistently decreasing. So unfortunately, it's a pretty consistent decrease overall. I have to give this a 0%. That's absolutely atrocious, especially after 1 year ago. By the way, guys, 1 year ago, it is 2022. Just keep that in mind. 2020 was 3 years ago in these graphs. So, guys, that consistent decrease is very, very bad. That's why I'm essentially giving it a 0%. Looking now into the free cash flow, this one, it is just looking, oh dear Lord, this one, it is just looking horrendous. 5 years ago of $14.25 billion, 1 year ago of negative $13.3 billion. That is a decrease of 193% with a 5-year average of $9.7 billion. Oh dear Lord. Let's actually take a look at what caused that negative. And if we actually see over here, guys, we got cash from operations kind of remaining the same, right? We went from what, 29 billion to 29 billion, 29.9 billion, 30 billion. It was around like the 32 billion dollar average from like 5 years ago to 2 years ago. And then 1 year ago in 2022, $13.7 billion in cash from operations. If we take a look at the capital expenditures, again, capital expenditures has been kind of remaining the same. 2 years ago, they did spike up to negative 20, but as of last year, they did negative 26 billion, almost negative 27 billion. That's why the free cash flow, it is negative $13.3 billion. That is not good, guys. Really, really not good. So I have to give this once again a 0% because, well, sure, they were going up from 5 to 3 years ago, but the fact that they just went negative just last year in 2022, that is a major red flag. Looking now at the revenue, this one actually isn't looking too bad. However, it is a little bit concerning overall. 5 years ago of $71 billion to 1 year ago of $69.5 billion. That is a decrease on the 5 year of 1.85%. You can see a pretty good consistent increase from 5 to 2 years ago, and then 2022, they just completely collapsed, going from 79 billion to 69.54 billion. The fact of the matter is that if this wasn't this low for starters, and the fact that this was just last year and last year just ended, yeah, this to me is a major red flag, honestly. So sure, I guess increasing 5 to 2 years ago, but we are starting to see a lot of bad signs when it comes to Intel, so they might actually continue to reduce this revenue in the future. I'm not going to give it a 0%, but I'm going to give it like a 20% overall when it comes to the revenue. Assets minus liabilities, this one, however, is looking very, very good. They have maintained the positive in the past 5 years, and on top of that, they have continued to increase this year over year at a pretty good rate. Average total assets is $161.54 billion. Average liabilities is $70.8 billion. Doing this difference, we get $90.74 billion. So I'm actually going to give this one, guys, a perfect score of 100%. They are consistently increasing it, and they have not been in the negatives at all within the past 5 years. Looking now at the cash flow minus the liabilities, however, I mean, we just saw their cash flow, right? We just saw their cash flow. It is consistently decreasing. So it's not surprising that 1 year ago was their lowest point at negative $88.27 billion. Oh dear Lord. And on top of that, they have been continuously decreasing ever since. Guys, that is horrendous to see. Average cash flow minus the average total liabilities, we get negative $56.8 billion. I have to give this a 0%. Absolutely atrocious. Looking now at the shares outstanding. This one is one that redeemed into a lot. However, as of recently, we are starting to see some issues popping up. They went from 4.7 billion shares to today of 4.13 billion shares. That is a decrease on the 5-year of almost 12%. But take a look at this. Ever since 2 years ago, at 4.062 billion shares, they started to issue shares. 1 year ago, 4.07. And then as of today, guys, 4.127 billion shares. They are increasing this from the previous year to the current year at 1.4%. This is not necessarily a zero, but pay attention to this increase of shares over here, okay? So for that reason, I'm going to give this, I would say, like a 65%, mainly because the increases that occurred 2 years ago to today aren't that big. And on top of that, they're still down the 5-year. But major red flag when it comes to this. And when it comes to their cash and equivalents, they currently hold 4.5 billion with an average of 4.3 billion dollars. Now, looking at the overall grades, guys, we gave the net income a 0%, free cash flow 0%, revenue 20%, total assets minus total liabilities 100%, cash flow minus liabilities 0%, shares outstanding of 65%, overall grade of 24%. Now, you're probably looking at this and you're like, you have done Intel before, and a year ago, I believe a year ago, I was saying, and by the way, you guys can take a look at my videos in the past, I did say Intel is looking like a pretty good option to buy at that time. Notice, at that time. The problem is that things change, and that's something that you have to take into account, especially when you make assumptions into the future. I honestly thought that Intel would recover at a much better pace than what they did. And yeah, now they're starting to fall a significant amount, and you can clearly see that their fundamentals are following as well. Meaning that this grade of 24% is duly given in my personal opinion. Obviously, back then when I did this analysis, the fundamentals weren't like this. You guys could go back and see the fundamentals. They had promise to them. And they were like, if they do good, if they do what they're supposed to do in the next upcoming years, this may actually be like a $60 stock. However, things have changed now. This is why, again, I can't stress this enough. Please do your own due diligence. Make your own assumptions. Read those 10Ks because you can lose money when it comes to this. So now let's actually see, based off of these new fundamentals that we have gotten, what price we should pay for this company today. Now let's make assumptions of their future revenue and their predicted share buyback. And we're going to be taking a look at this, guys, in CK Alpha's growth tab. We can see that the forward revenue is estimated at negative 8.1%. So let's pretty much say the same thing, that the revenue would be at around like the negative 8%. For the lowest assumption, let's say negative 8. For the median assumption, let's bring this up to like negative 6. And for the highest assumption, let's bring this up to negative 4%. Now for the projected share buyback. Okay, they have been buying back at around 11% in the past 5 years, but they're starting to issue. Remember that. So for that reason, let's say that they'll continue to issue shares in the next 4 years of, let's say, at around negative 6% for the lowest assumption, negative 4% for the median, and negative 2% for the highest assumption. And the reason why I'm putting negative is because the negative just means that they're issuing. So in the next 4 years, you're going to see a 6% share dilution in their total shares outstanding. So with all of that and the required rate of return of 10%, guys, take a look at this. The target share prices now are $15.12 to $18.28. And then adjusting for debt, this comes down to $12.55 to $15.61. With a margin of safety of 5, 10, 50%, the target share prices are now $10.67 to $14.83. Now, if you guys remember my earlier videos, I'm talking about like really early videos, like from like a year ago or probably even more than a year ago, Intel's fundamentals were showing at around like a $60 price tag. And back then, their stock price didn't really move much, and it stayed around like the $40, $45 mark. It really didn't change, but as of recently, it has been changing, and this is just proof right here that when the fundamentals changes, the target share prices also changes because the company is now worth less than it was before, because now the amount of cash flow that they're bringing in, the amount of revenue that they're bringing in, and net income are significantly lower. So now you have to pay less for this company in order to get the same kind of return. So this is what I mean by every investment is the present value of all future cash flow. When stocks fall, you have to reanalyze as to what is currently happening. If the numbers remain the same even after the fall, or somewhat the same after the fall, because their fundamentals are staying the same, then that means that you should take advantage for that company to buy it at that price because their fundamentals are doing really good. In this case right here, their fundamentals are crashing really hard, especially that free cash flow. So it's not really unexpected to see target share prices going from $60 to what, $12.55, and as low as $10.67 with a margin of safety of 15%. It's not really surprising, guys, but again, this is why I say in every single video, please have these calculators for free. Every investment is the present value of all future cash flow, and this right here is proof of that. For all of those of you who might say, you were wrong, see, you said that this was going to $60, now it's not. Guys, the story has changed. You can take a look at those fundamentals back then, and because we can't see the future, I wish I had a crystal ball, but because we can't see the future, it looked like Intel was actually going to be doing pretty good overall. But unfortunately, they did not, and this is now their current share price. This is why you need a big margin of safety on top of that. So again, this is why I have these calculators available for free. I have this one, the book value one, the revaluation one, and a dividend tracking sheet. All I'm asking for in return, guys, for these free calculators, daily content, is just help me grow my channel, like, subscribe, comment. It really does help with the algorithm on YouTube. Now, looking at this dividend further, let's assume that you put in $5,725. Now, as I said, be careful when it comes to this dividend because they might cut it. But assuming that they don't, take a look at this. Annual dividends per share with that amount of money into this company, guys, $277.80. Now, let's change the share price to that $27 share price that's currently at right now. And the amount of dividends that you get paid are $309.59 in annual dividends. But please be very careful because, as I just showed you guys, when it comes to those payout ratios, they are very likely to cut this dividend if it means taking that free cash flow and reinvesting back into themselves. So that way they do not go bankrupt. So just keep that in mind. This isn't a safe dividend as it currently stands right now, but this is how much you would get in annual dividends if you were to buy into this company today. All in all, when it comes to Intel, it was very depressing to see. In my personal opinion though, it is what it is, right? I'm not really gonna cry about it, but it really just goes to show that you really have to be careful when it comes to investing, and you have to take into account all countermeasures when it comes to the companies that you look at. Take this as a lesson for the ones that you're looking at as well. No company is safe. People who say, how low can it go? I'll tell you how low can a company go. Zero. Technically zero. Again, guys, every investment is a risk. So watch out, make sure you have your right margins of safety, make sure you have a process so that way you know why you invest in a company so that when hard times hit, you're not panicking. Anyways, that pretty much is it for this video. Like if you like, comment, subscribe. As I said, you guys can follow us on the new tech sites, link in the description below. So with that said, peace out, and I will see you all in the next earnings report video as well as stock analysis video.